We think a lot of good things are happening from a policy backdrop and therefore ultimately a macro backdrop. The deregulation that we're seeing is stunning. Moving from depreciation to full expensing of structures, that has never happened before. I think we're in for some very good times. We think we're moving from a rolling recession into a recovery and then into a productivity-driven boom in activity.
Cathie Wood, the legendary CEO of ARK Invest and one of the boldest voices in finance, just issued what might be her most explosive prediction yet. In her latest interview, Wood said something that caught the attention of every serious investor. We're moving from a rolling recession into a recovery and then into a productivity-driven boom. Think about that. Not just a recovery, but a boom. According to Wood, the U.S. economy is about to enter a golden era powered by deregulation, innovation, and the most aggressive corporate tax incentives in modern history. New policies now allow companies to fully expense manufacturing structures, research and development, software, and equipment. That means more money flowing directly into innovation, automation, and growth. And here's the shocking part. She believes the effective corporate tax rate in America is dropping to nearly 10%, one of the lowest in the world. Her conclusion? We're standing at the doorstep of a massive productivity explosion, one that could drive markets higher, crush inflation, and create generational opportunities for investors bold enough to act before Wall Street catches up. But here's the million-dollar question. Where is Cathie Wood herself putting her money? Which companies does she believe will lead this next supercycle? Today, we're breaking down the top 3 stocks Cathie Wood is buying right now across all ARK Invest funds, the companies she believes will shape the next era of innovation and technological disruption. And stay with me until the end, because the final stock on this list has quietly evolved from a gadget maker into one of the most powerful digital advertising platforms in America. If Cathie Wood is right, these 3 companies won't just outperform the market, they'll define it. 1. Roku, the sleeping giant of streaming and advertising. We begin with Cathie Wood's third pick, Roku. It's not the flashiest name in tech right now, but that's exactly why it's so intriguing. Roku is one of the most underestimated digital media platforms in America, quietly dominating your living room while Wall Street looks elsewhere. What most investors don't realize is that Roku has transitioned from a hardware company to a data-driven advertising powerhouse. Its Roku channel now commands over 2.5% of total U.S. streaming share, putting it shoulder to shoulder with the giants. In the second quarter, streaming hours surged 17%, surpassing 35 billion hours watched. That's not just engagement, that's advertising gold. With ad dollars rapidly shifting from cable to streaming, Roku has become the ultimate middleman for connected TV advertising. Revenue for 2025 is projected at $4.7 billion, up 16% year over year, and profitability is back on the rise, with EBITDA margins expanding over 170 basis points. Roku has also locked in strategic ad inventory deals with Amazon and The Trade Desk, turning it into a central hub for advertisers trying to reach the modern streaming consumer. But Cathie Wood's real thesis goes deeper. Roku is building an AI-driven ad recommendation system, a move that could transform it from a streaming device company into an advertising data platform. ARK Invest believes Roku is laying the groundwork to dominate the digital attention economy, a future where TV ads and commerce merge seamlessly. And with shares still trading nearly 70% below their pandemic highs, Wood sees this as one of the most asymmetric risk-reward plays in her entire portfolio. 2. Coinbase, the infrastructure of digital finance. Cathie Wood's second pick is where innovation meets disruption. Coinbase Global Coin. Wood calls Coinbase the new financial backbone of the digital age, and she's backing up that claim with massive conviction. It's now her second largest position across all ARK ETFs. Coinbase isn't just a crypto exchange anymore. It's becoming the infrastructure layer for the new Internet of Money. After a brutal 2022, Coinbase made a stunning turnaround, turning 14 cents EPS last year into over $5.14 this year. That's not hype, that's execution. The company's subscription and services segment, including blockchain infrastructure, custody, and staking, now drives consistent recurring revenue. And the best part? Institutional adoption is surging. Hedge funds, Fortune 500s, and even governments are turning to Coinbase for digital asset management. With the U.S. stablecoin framework finally providing clarity, Coinbase partnership with Circle, and USDC gives it a moat few competitors can match. Add in the fact that crypto markets historically surge in Q4, with Bitcoin's median return topping 50%, and Coinbase could be staring down another record quarter. But for Cathie Wood, Coinbase is about more than short-term earnings. She sees it as the Nasdaq of digital assets, the core infrastructure for a decentralized financial system. If Bitcoin ETFs expand globally and digital assets continue mainstreaming, analysts see $350 to $400 per share as a realistic 2026 target. Wood has made one thing clear: she's not betting on the price of Bitcoin. She's betting on the financial rails of the future, and Coinbase is building them block by block. 3. Tesla, TSLA, the cornerstone of innovation. And finally, Cathie Wood's number one pick, the stock that remains at the absolute heart of ARK Invest's vision, Tesla TSLA. Even after all these years, Wood is more bullish on Tesla than ever. Not because of cars, but because Tesla is no longer an automaker. It's a full-scale AI, robotics, and energy powerhouse. Cathie Wood has repeatedly said Tesla is on the verge of unlocking its next trillion-dollar frontier, autonomous AI and robotaxis. According to ARK's 2025 to 2030 forecast, Tesla's full self-driving platform could turn into a $9 to $10 trillion opportunity, with margins and scalability that rival software companies, not car makers. And while most of Wall Street still values Tesla as an EV company, ARK sees it as an AI-first platform with neural networks, Dojo supercomputers, and data infrastructure years ahead of competitors. Tesla's recent updates only reinforce this view. The company's Dojo AI training system is now officially scaling, capable of processing real-world driving data faster than any chip on the market. Its Optimus robot project is moving into early-stage commercial testing, and energy storage deployments are accelerating, with Megapack demand outstripping production. Even in a high-rate environment, Tesla continues to expand margins, maintain profitability, and dominate EV market share globally. And with Elon Musk hinting that the robotaxi unveiling in 2026 will redefine the value of Tesla, Cathie Wood believes this is where the exponential curve begins. ARK's official price target? Between $2,000 and $2,500 per share by 2030, with autonomous driving as the key catalyst. Tesla remains the beating heart of Cathie Wood's innovation thesis, the company that ties together AI, robotics, energy, and automation into one unstoppable ecosystem. In her words, Tesla isn't a car company. It's the foundation of the new economy. So there you have it. Cathie Wood's top 3 conviction plays for the 2025 innovation boom. Roku, Coinbase, and Tesla. Each one a leader in its category: media, money, and machines, together forming the blueprint of what ARK Invest calls the technological convergence. And if history repeats, if Cathie Wood's bold predictions once again play out, these 3 names could be the ones rewriting the next decade of wealth creation. Because in markets like this, fortune doesn't wait for certainty. It rewards those who see the future before everyone else does.